All right, good evening, everybody in the Free Credit Repair Advice Group. I am Jeremy Deysach, the founder of the Free Credit Repair Advice Group and FICO certified Credilife coach. I wanted to restart this video. We had some technical issues, so I wanted to get it going once again for everybody so that we could have everyone taking part in this tonight. So what I'm going to do is I'm going to wait for the room to fill up just a little bit more. It looked like people were having difficulty finding the group, and I think that's something that happened last week. So what we're going to do is we're going to make sure that that doesn't happen again. This time, obviously, it seems to be working better. We're getting people to fill it up. So I wanted to tell you first, before we get going, this is Facebook Live, brought to you by CrediTV and sponsored by Credilife, a financial wellness company. Now, CrediTV, we are the YouTube channel that puts on a number of different credit videos. So if you have not yet subscribed to CrediTV on YouTube, it's CREDI-TV. Just Google CREDI-TV and some of our videos will come up and you'll be able to find us there. So if you are to do that, if you're going to Google CrediTV on YouTube, what you're going to find is many different educational videos. You'll see past videos of here, follow me, CrediTV. Here's what I'm doing. Boom, I'm putting the link right there in the chat. You'll see past videos of the Facebook Lives that we've done and some educational things that are special for it. So we do this Facebook Live every Wednesday evening at about 7 p.m. Central Time, and we do a number of different topics. Typically, we're doing topics about, you know, how to do this when it comes to your credit or what to avoid there when it comes to your credit. Today, we're going to do something a little bit different. We're going to talk about the why. We're going to talk about the long-term reason, the long-term strategy, the long game when it comes to credit repair and when it comes to credit restoration. Most people come to us and they say, hey, I'm looking to get into a house or a car, or I'm looking to clean up my credit because I want to have opportunities, or maybe I need a credit card for business. And they're focused on their goal. And everything that's done is based on their current credit situation and their goal and the steps and the building blocks that it will take to get them there. The big question becomes this. So now you've got the credit card, now you've got the house, now you've got the car. Now what? What are the other benefits? What are some of the other benefits, long-term financial wellness benefits of having this good credit? So we wanted to take some time tonight and talk about it because there are a number of different benefits that people don't typically focus on. They don't think about, or you don't even realize it's nearly as powerful as it really is. So when it comes to your credit, credit's used for everything these days. It's not just used for the big things. I mean, we all know about mortgages. We all know about car loans. We all know about student loans and credit cards. We all know about those sorts of things. But credit, importantly enough, is used for things outside of even the normal credit spectrum these days. So I want to go through some of those together tonight with you. So one of the first things that I want to talk about with credit, okay, is background checks. This is probably the most overlooked aspect to why it's important to have a clean credit history, a good credit score, and a real positive credit profile, okay? Background checks are done for jobs. Background checks are done for apartment living. Background checks are done if you're in the military to get security clearance, or if you're in any other job that requires security clearance. They will do a background check. Within the background check, they will pull a credit report. I've seen time and time again, people come to me professionally as a credit coach, and they were offered a job. Sometimes they were offered a job in a new city. They've moved, they relocated, they quit their other job, they gave their notice. And the thing is, the background check cannot be done prior to you accepting the job. So people accept the job, they give their notice to the employer, that background check starts. Now, a background check can take a month to come back. I've seen it 2 months to come back. This person might be already employed with their new employer at that point in time. All of a sudden, HR comes in and says, hey, we have to talk. We can't, we have to rescind the offer of employment because you didn't pass the background check. You have a bankruptcy, or you've got a judgment, or you've shown fiscal irresponsibility. Or if it's a security issue, you owe money. And people who are in situations where they owe money would be potentially more prone to being bought off to say things like where the troops are hiding. So these people go from having a job to thinking they've got this new opportunity, leaving the other job. So now they don't have the new job. Now they don't have the old job. They don't have the credit to pass a background check for another job, and they're in a lot of trouble. So one of the core financial wellness benefits, I think, comes in with background checks, with employment background checks, with military security clearance background checks. Apartments, if you want to live somewhere nice, they will typically do a background check for you. A background check will be the difference between getting into a nice apartment or not getting the apartment. It can also mean the difference between putting down 2 or 3 months of security deposit because you're considered less trustworthy than somebody who's got a good score that may have to just put down the last month's rent. So one of the long-term wellness situations to consider with credit, it's background checks for employment, it's background checks for security clearance, and it's background checks for places to live. Okay, that's one aspect of how credit impacts your lifelong financial wellness. There's another aspect to how credit impacts your lifelong financial wellness, and that is cost of debt. Have you ever wondered how some people you know can buy things like you can, yet they seem to always still have some money? And maybe you're buying the same things, but you feel like you're scrimping and scrounging and going paycheck to paycheck. Well, one of two things is happening. They're either buying it all on credit and pissing that away, but more realistically, they've got good credit. Good credit means good interest rates. Good credit means good financing terms. Good credit means low interest rates on cars, low interest rates on mortgages, low interest rates on credit cards, 0% balance transfers on things, low interest rates on student loans, or anything else that you have to finance. Here's the thing. If you are financing a car, the average vehicle, at 8% interest, if you're financing the average $20,000 vehicle at 8% interest, or you're financing it at 4% interest, and that's not a very big jump in credit score. That's about a 40-point jump that causes that 4% increase from what I've seen lately in interest rate. That difference on a 72-month loan, a 6-year loan on a $20,000 vehicle, that little 4% difference, that 40% score swing, will work out to $4,000 over the life of that loan. $4,000 difference. So you and the person next to you bought the same vehicle, and because they had 40 points higher on their credit score, they're paying $4,000 less for it. So you wonder how the rich get richer and the poor get poorer. Well, the rich will oftentimes have their credit in shape. Why? Because they're rich and they can afford to do so. So for those of us who do not have pockets completely overflowing with $100 bills, we have to focus on the long-term wellness benefits of having good credit. We want to save $4,000 over 6 years in interest on a car. That's money we can put away for our kids' college. That's money we can use to pay off debt. That's money we can use to better our lives. It doesn't stop there. Mortgages are the same way. The difference between a 640 credit score and a 740 credit score could be a 1% difference on a mortgage rate. Well, on a 30-year mortgage, $200,000, we're talking $60,000 difference in interest. Again, the same situation. The only difference between you and the person next to you was they either took the time to have their credit repaired professionally, or did it themselves, or just had a good credit outlook with education from the beginning. But either way, good credit will affect your whole financial wellness for your life. It really will. So that's interest rates. Even interest rates on credit cards. It can be something as simple as that. Let's say you qualify for Care Credit. Care Credit does financing for medical procedures and for dental procedures. Okay, let's say we need to have a $2,000 dental procedure done. The difference in credit there, could be $500 over the life of the credit, over the life of this revolving credit in the rates that you get, because you've got a lower score than someone else. Your teeth are no shinier than theirs are, or theirs are no shinier than yours are. You had the same procedure, and the only difference is score. So when people look at, well, let's see, what's the cost of repairing credit? If you hire a professional, $135 a month, I can't afford that, that's too expensive. Or if you have to pay down your cards or put money for a secured card, $200, that's too much to put for a secured card, that's too expensive. That's nothing compared to the financial wellness cost for your entire life of having that bad credit. Okay? You have to think this way. You got to think long game. You got to think long term. I say it all the time. Credit is not a sprint. It's a marathon. You didn't get into trouble overnight. You're not going to get out of trouble overnight, okay? Just because it's going to take longer, you may want to look at other things that are longer, your life outlook. Where do you want to see yourself 5 years from now, 10 years from now, 15 years from now, financially, credit-wise, and all of that? This stuff doesn't operate in a vacuum, okay? So we're talking about interest rate savings. That's more money for you. We're talking about opportunities, background checks, and things like that. All of that trickles into budget. It's easier to balance a budget if you're not spending as much on things. It's easier to balance a budget if you're allowed to have that job you accepted. So that works into your budgeting as well. So does savings. So does the whole thing. Exactly. Scott says, credit repair is a journey, not a destination. Absolutely. The highest credit score possible in the FICO model is 850. I've never seen one. I've been in credit for 24 years. Okay, I've looked at hundreds and hundreds and hundreds of thousands of credit reports. Okay, so until I see an 850, everybody I meet is on that journey. So financial wellness benefits, interest rates and savings, financial wellness benefits, options and opportunities when it comes to jobs. A financial wellness benefit of your credit could also be retirement. It could also be savings. Again, this goes back to not having to spend as much now and over the long term because your scores are better, okay? If you don't have to pay as much on your interest rate for your mortgage, you could take the difference and invest it. Are you maxing your 401k? Do you have savings set aside? Do you have an emergency fund, or as I affectionately call it, an oh shit fund? Like, oh shit, the furnace broke. I've got to pay $1,000 to fix it. So I always believe in having at least a $1,000 oh shit fund. All right? So how are you going to fund that? How are you going to do that when a lot of us are working paycheck to paycheck? Well, you can work harder and work more hours. You can get a better paying job. You can cut everything you enjoy out of your life, or you can also look at the credit angle and start paying a lot less for basic things that you do on a day-to-day basis now. So you tuck things away for this, and all of a sudden, the things that happen in life, the oh shit moments, okay? The things that happen in life become a lot less of a tragedy, okay? The things that drove you to having to max out your credit card before, you now have that emergency fund for. You now have these things in place. You can look at it and go, you know what, guys, I got this. I have money tucked away for just such an occasion. So all of this spawns off of financial wellness, which is what Credilife teaches, which is what we preach in the free credit repair advice group. It's all about financial wellness. It's not just, gee, let's see what we can get deleted off your credit report. No, it's credit development. It's doing it the right way. It's getting balances there. So we've talked about savings and interest, right? We've talked about options and opportunities that are provided because of the background checks. We've talked about our futures, okay? There are some other obscure places that you would never think credit is used. One of my favorites is insurance. Did you know that you could have the same car, the same demographic, the same driving history, the same age, the same zip code as the guy or gal next to you, But if you've got different credit scores, you're paying different amounts for your insurance, okay? Insurance is using credit risk to determine how much you're going to pay. Again, this all operates together. The lower the score, the higher the risk they've determined. The higher the risk, the higher the premiums. The higher the premiums, the more money out of your pocket for the same thing. This all goes back to a long-term financial wellness strategy. So we want to get our credit in shape. We want to get our credit in shape for our goal that we have for ourselves, our car, our credit card, or our house. We want to get to our goal, right? But just because we're there, we don't want to stop. It's not the end. That's not, as Scott said, that's not the destination, okay? So what do we want to think about? We want to think about, what do we do the day after we close on the house? What do we do a month, a year, 10 years after that? How are we continuing to build to affect ourselves positively with our overall financial wellness? You know, we can do things once our credit gets better, like shop around and get better pricing or better quality insurance. We can do things like shop around for refinance rates on our cars or refinance rates on our homes to save money, maybe get into better loan programs. Maybe if you have a mortgage with PMI, mortgage insurance on it, maybe you can drop that. That's more money to tuck away. That's more savings. Maybe you can go after that job without the fear of rejection due to the fact that they may look back and see that bankruptcy on your history, or see the times where you defaulted on your student loans or you couldn't pay those credit cards, and you don't have to explain that to them now. In fact, you're getting a good, clean bill of health. You're getting these opportunities. That's what financial wellness is about. That's what it can bring to you, and that's some of the financial wellness benefits. I want to hear from you guys some ideas of other financial wellness benefits. What other things can you think of? And you've got the comment section to add that. What other things can you think of where credit is used in a day-to-day basis? Cell phones, getting a new cell phone plan or upgrading your plan, they pull your credit. What about getting Dish Network or Comcast? Even some basic utilities, they're pulling your credit. Think about these areas. If you want the best things in life, you have to have credit as part of that overall financial wellness. I had a mentor when I was younger who, when I first got into credit, he was very Yoda-like. He would come up to me and just say some bizarre-ass thing and wander off, and I'd sit there and ponder on it. So he walks up to me one day and he goes to me, he looks and he goes, "Good credit, good life. Bad credit, bad life." And walked away. I said, "Thanks, Yoda," as he walked off. But here's the thing. I thought about it, and it's the truth. If you've got good credit, you're going to have a pretty good life. You're going to have opportunities and options. If I walk into Home Furniture and I see a living room set I want to get, I don't have to think about, gee, will I qualify for the financing? I have to think about, can I afford it? Do I want it? Will it look good in my living room? The credit aspect's not even a thought once you're there. So I'm going to scroll back through some of the comments, and I'm going to scroll back through, and there, this is a Q&A. I'm going to answer questions as well. So let's take a look and see what we have. Scott, definitely, I'm very distracting, Scott. Susan, thanks for joining us. Portia, thanks for appreciating the topic. Mark posted our mission trip to Haiti. Renee made it. Good to see you. Scott, insurance, absolutely. Good to see you guys. Yeah, Bo Rodriguez. They do credit checks before you join the military. Absolutely. Scott, who I know, Scott, you're a veteran, and I thank you for serving. Your son is in Marine boot camp. They did his as well. Your son's going in. Oh, if he's going into cyber security, oh yeah, they're going to want to know everything about him. They want to know that he's 100% trustworthy. Alexandria says, "I was offered a job with the sheriff's department as a dispatcher and sadly didn't get it because of my credit. I experienced it firsthand. It's a horrible, horrible, horrible situation to have to go through. I'm so sorry that happened. It's very scary." Scott says, "I do background check on my sales guys as we do." Yep, because we handle personal information. Absolutely. If you're going to be a credit coach, I want to know that you're reliable and trustworthy, that you're not somebody who's going to run off with somebody's social security number with their credit information. We are trusted at some of the highest levels of trust of anybody you're going to run into. I mean, we hold your financial world in our hands, and the amount of trust that you give in to us, it is an absolute honor. And to make sure that we're deserving of that honor, we are extremely diligent in who we allow to access your information. Mark says, want to work with a Credilife coach, schedule a consultation here? Yes, if you do want to talk about credit and maybe have a professional coach help you so you can have some of those midterm, long-term financial wellness things in life, absolutely, it would be wonderful to have a coach help you out. What's a spending percentage for credit cards, Hayden says? A good spending percent for credit cards, a good utilization for credit cards. I'll tell you, there is a perfect one. Within the FICO algorithm, there is a perfect region, a perfect zone, a perfect utilization, a perfect spending. It's perfect because it's the region that will give you the most points every month added to your FICO score. The thing is, it's comically small. The perfect balance to limit ratio in the FICO algorithm for your revolving accounts, your credit cards, is 1% to 3%. 1% to 3%. That's it. No more and no less. Any less, you broke it. Any more, you broke it. Any more than 3%, you broke it because you went outside the area that you're going to get the most points from. And what are we trying to do? We're trying to get the most points. Any less than 1%, you broke it because less than 1% is not considered activity, and you need activity to generate points. Okay, so now we know this. We can work with this. So we're going to use an example. Let's say you open up a $300 limit secured Capital One MasterCard, okay? You've got a Capital One MasterCard. It's got a $300 spending limit on it. Jeremy's telling you here, you need to do 1 to 3% on that card. So on that $300 limit card, that means a monthly spend, a monthly trended average daily balance, and a monthly payment of between $3 and $9. No more and no less. So how are we going to do this thing? Well, we're going to turn it into a credit machine, all right? We're going to take a reoccurring charge that we have anyway. Think Hulu, Netflix, Amazon Prime, Dollar Shave Club, ABC Mouse, Spotify, something that charges the same amount of money that falls between the $3 and $9 every month, okay? So I'm going to go with my Netflix. So we put Netflix on the credit card. I now set my checking account up to auto pay the credit card on the due date, the date it's due, all right? So money goes on, money gets paid. Money goes on, money gets paid. What do I have to do? Nothing. Sit back and watch the newest season of Stranger Things, and my credit's going up. It sounds painfully simple. It's because it's painfully simple. Do not overthink it. Do not overcomplicate it. Here's what you're going to do. Every month the card starts out, nothing on it, all of a sudden, bam, Netflix hits. That's activity, and you get points for activity. How many points are you going to get? I don't know. What's your activity? It's 1 to 3%. You get the most points. Then that money's going to stay on the card as a trended average daily balance until the bill is due. The newest incarnations of FICO algorithm count trended average daily balance and give you points for that. What's your trended average daily balance? 1 to 3%, you're going to get the most points. And then when the due date comes along, your checking swoops in and automatically pays the card. That shows the ability and willingness to repay in a timely fashion. And you get the points for that. And then it happens again and again and again and again and again every month. Activity, average daily balance payment. Activity, average daily balance payment. Points, 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 points. What do? You sit on your butt, you watch Orange is the New Black. That's it. The next step, you know you better than I know you. You're either going to cut that card up because you don't need it. It was simply a tool to facilitate setting up that credit machine. Or you're going to leave it at home in your sock or your underwear drawer. But you are not going to carry it with you. You're not. And I'm going to tell you why. Here's the thing. I'm talking to you. I see you. You know exactly what I'm about to say potentially. All right. It's painfully easy to justify using that card. It's so easy. It's painfully easy to justify using the credit card. Here's what you're going to do. You're going to go, I tell you what, I'm at Target, this thing, it's only on sale through Sunday, and I got a huge commission check coming next Friday. I got a big paycheck coming too. I'm going to put it on the card. I'm paying it off next Friday. I'll still be back to 1 to 3%. No big deal. And guess what? No, you won't pay it off. Nobody ever has. Something happens. The brakes go out on the car. Something happens. The commission check was smaller than you thought, and you get messed up, okay? The other reason I don't want you to carry it with you is I don't want you to accidentally stick it in the gas pump instead of your debit card and oops your way out of a month's worth of FICO algorithm optimized points. Because if you're going to piss your points away, at least have fun with it. Does this make sense? 1 to 3% spend. Auto spend each month. Amazon, Hulu, Netflix. Set checking up to auto pay it. Cut the card up or leave it at home. All right. That's what we call at Credilife your credit machine. And that will maximize your point potential. That simple thing there within the FICO algorithm. I hope that answered your question, Hayden. Bo says 1 to 3%. Scott pointed out that 0% interest on 80 grand on a truck versus 3%, which is still smoking interest over 72 months, it's $14,400 in savings. And that is the difference between having maybe a 680 credit score and a 760 credit score. Alexandria said, I wish I knew how important credit was 5 years ago, but I got this now. I got this. You got this. You got this. You're here. You're part of the group. You're active. You're here tonight. You could be watching anything. You're not. You're watching Crazy Jeremy on the computer. You got this. Clean teeth. Yep. Scott Moran, credit restoration is a journey, not a destination. Exactly. That's why financial wellness is a lifelong thing. Bo says credit's huge, saving $6,400 over 6 years. That's $1,000 a year. You could use it to have fun with your family. 4 annual passes to your local water park. Anything. Renee says, I need one of those funds. Yeah, the oh shit funds. They're very good to set aside for. If you have to, you know what? For those of you who haven't opened a self-lender yet, if you've seen that in the group, self-lender, if you haven't opened up a self-lender, it's a forced savings account that basically reports as an installment account on your credit report. If you haven't opened one up, set it up so that you'll have put $1,000 into it and do it in little bit-sized pieces. You might as well, while you fund your oh shit fund, you might as well get your credit to go up. Scott says, I got an 847, can't break it. Yeah, it's hard, man. When you're the 840s it's fine-tuned. You've seen 849. Yeah, I've seen it. My father had an 849. And I helped and tried everything. I can't figure it out. Susan says, have credit scores changed over the years? And has the lowest or highest credit score always remained the same? Oh, fun question. Yeah, credit scores and the ranges have changed a lot over the years. Every once in a while, with a new incarnation of the FICO algorithm, they'll come out with a new ceiling. They'll come out with a new floor. They'll also come out with different aspects of that. Tiffany says, don't drown. That's okay, Tiffany. I have a towel. Hayden says, jobs. Absolutely. Credit is so crucial for jobs these days. They can find out so much about you in a background check, and one of the things they're checking is your credit. Bo says, I know, I like how Jeremy goes out of his way to help everyone. He's like a big dad to everyone. We can call him Credit Daddy. I like Credit Daddy. I like that. We can go with Credit Daddy. Credit's used for everything, Susan says. Absolutely. Want and need are hard to differentiate sometimes. You know what? Want and need is the difference between having a good budget and not having a good budget. Want and need can be the difference between good credit and bad credit. Want and need is the difference between having an oh shit fund and having the latest Xbox, So, I mean, if you want to do something neat, I mean, if you're not even at the point where you're ready to bust out a budget yet, sit down sometime and do a column set. Wants and needs. What do we need around this house? What do we want around this house? I want an 80-inch new HD 4 TV that makes, espresso or whatever. Do I need it? Maybe not. I've got 11 televisions right now or something like that, or 12. So no, I don't necessarily need it. I want it, but I guess I need to, you know, get some new shelving for the garage so stuff isn't everywhere. Okay, so you balance those things out. What are your wants? What are your needs? On a day-to-day basis, on a week basis, it could be I need to eat lunch. I want to dine out. I need to eat lunch. Well, how's that work out? Well, you can decide where to shift the money there. That is some 101 stuff if you want for like pre-budgeting. Mark says, thank you, Scott, for your service. Amen. Hayden says, is too much debt a bad thing if payments are on time? Oh, too much debt is always bad. Too much debt's always bad. Where that will come into consideration is if you're applying for things and they take your debt load into consideration when they look at something called DTI, debt to income ratios. Basically, how much you got versus how much you owe. That's debt to income ratios. And automotive, they'll allow a certain debt to income ratio. You can have so much be what you owe versus what you get. And houses will have a different one. So yeah, it matters. It does matter. Susan says, can you be kicked out of an apartment if you're already moved and your bankruptcy or your background check doesn't come back? Wow, I don't know. I know it's different from state to state. If you're still in Minnesota here, Susan, it's really tenant protective, but that's some housing authority questions. Scott says, plus as credit repair companies, we have to have a $100,000 surety bond. Yes, absolutely. And you don't get a surety bond without good credit. Hayden says, why would a credit card company deny me for a secured card when I'm the one putting a deposit down? Hayden, if you've ever had a credit card with that company and something happened, like let's say it's Capital One, and you want to do a secured card, but you burned them on something, that's a common reason. We can talk more about it, though, if we want to get into your particular case. Post about it in the group. I'd love to talk to you about it a bit. Scott says, those that have an 800-plus score have less than 1% credit usage. That's true. Renee says, I froze it. Scott says, all mine are in my safe. Romy asked what she froze. Hold on one second. All right, let's see. My card. Okay. Bo said, Cheryl knows damn. All right, life happens. Life does happen. Life does happen. Nate says, so what happens if you spend over 3%? Do you get no points or no more? Okay, what you don't get as many points. It scales up. You get less and less and less and less points until the point where you don't get any points, until a point where the more you're spending, percentage-wise, it's costing you points on balance to limit ratios. It's kind of how it works there. Mark, thank you. You put up the link for Self-Lender. Nate said, so if you go over 3%, you will get FICO points. You won't get as many. And if you go up too high, you can do it where you won't get any. And if you go up way too high on what you spend against the limit on the card, you will lose points. Isaac said, my credit hasn't really budged in a while. What can I do to make it squirt a little? Well, I'll tell you what you'll want to do to make it, kind of make it just really, really take off there. You want to make sure that you are maximizing your point potential, 1 to 3% active on every open and active revolving account. If you are at a point where you've only got 2 or 3 revolving accounts, it is safe to add another one or another 2. You don't really want to exceed more than 5, particularly if you're in a rebuilding phase or a rebuilding stage. You also don't want to ever put yourself into a situation where you can't afford it or you get out of kind of whack that way. You also may want to start working on your credit blend. You may want to open up a self-lender if you don't have enough installment accounts. You may want to lease something. There are a lot of different opportunities, a lot of different options that you can utilize there to go ahead and go up further with it. If you look at the FICO wheel, the 5 aspects of the FICO algorithm, that's kind of the very basic 101 Cliff Notes version of what the FICO algorithm is. But if you look at it, there are some clues built into it right there. Scott says too much debt is bad. Bo says advice for people in good standing, but the only thing that's holding them back is time, such as length of credit history. I'll tell you what, Bo, the only thing I could tell you is let's work on a time machine. Otherwise, you want to just continue to make on-time payments. There, the authorized user account to try to do your time and the tricks and the tips and things like that, they're all bogus. The newest incarnations of FICO aren't using authorized users. Underwriting guidelines mandate that they be thrown out. The only thing the only thing that can really make time take place is time. What I will say is do it sooner, get it going faster, don't hold off the positive development steps on your path to financial wellness there. Mark says 75 surety bond for my brokerage this year, 5,500. Next year's 800. Yep, that's about right. Toys R Us might be getting saved. Wait, what? I am absolutely not knowing what you're saying. Oh, Rebecca Toys R Us might be getting saved. I think I missed Rebecca's post. All right. So, basically, I mean, to recap, I wanted to kind of just go over this quickly and just talk about some of these aspects. So when it comes to financial wellness, obviously, it's broader than just your credit, okay? But I wanted to talk about, because we're a credit group, the pieces where credit starts to interlace into it. Later on, we will do videos, Facebook Lives on budgeting. We will do some on insurance. We will do some on a contingency fund. We will do some on debt reduction strategies and things like that. But right now, I wanted to get you thinking about the long-term impacts and how credit impacts financial wellness. Remember, background checks for jobs, background checks for security clearance, they use your credit to determine that, and you can get an unpleasant and unwelcome surprise and find out that job offer that you got needs to be rescinded if you don't pass the credit portion of the background check. They do background checks for credit checks for apartments. It could be the difference between getting a place to live and not getting a place to live. They do these credit checks for insurance. It's the difference between paying more for the same vehicle than the person next to you. They do credit checks for utilities, cell phones, Dish Network, Comcast, DirecTV. They're all doing credit checks for the plans you'll have, the opportunities you'll have, how much you have to put down on these things. It's very, very, very important for the long term of your financial wellness to get your credit in place. And then the big one, the interest rates. Okay, the interest rates, the difference between that 3% and that 0% financing on an $80,000 truck being $14,400. That's insane. That's a ton of money. So the interest savings alone makes a huge difference in your quality of life. Remember, good credit, good life, bad credit, bad life. That's what it comes down to. I want you to have the best financial wellness you can. Stay active in the group, in the free credit repair advice group. Read the documents. Go to the files section. Read pro tips. Read Credit IQ. If you have not yet followed and subscribed to us on YouTube, on our YouTube channel, CrediTV, that's CREDITV. I definitely recommend that you do so. You'll find all of the recordings of our past Facebook Lives that we do every Wednesday night at 8 p.m. Eastern, 7 p.m. Central, 6 p.m. Mountain, and 5 p.m. Pacific in the free credit repair advice group. You'll find those. You'll find some educational videos. You'll even find videos of the class that I teach for the Minneapolis public school system called Financial Foundations and Credit. It's a 3-part course there. That's all available for free for you. So subscribe. If you like our videos, give them a thumbs up. If you got a comment, leave, if you got something great to say, leave it. If you got something bad to say, go away. Otherwise, again, join us every Wednesday night, same bat time, same bat channel here in the free credit repair advice group. And if you know anybody who could benefit from what you're learning here, go ahead and invite them to the group. We're not always the easiest to find. We are a group where they will outside people will not be able to see what you're posting in the group. I always call it the strip club effect. It's okay to have your friends in there, or it's okay to have people you know in there, because if you see each other, well, you're both in there, so no one's going to say anything. So you're safe there. Otherwise, my name is Jeremy Deysach. I am FICO certified Credilife coach. I'm the founder of the free credit repair advice group. Stay strong with your credit. Keep positive. Keep looking forward towards a full life of financial wellness, and join us again next week. Thanks a lot.